Blaster, where we blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets Editor John Dobis. Today, talking about China, or as former President Bill Clinton says, China. This is the Great Wall of China, meant to keep the Mongols and other invaders out, but perhaps it did a good job of keeping Chinese goods in the country. The Chinese trade deficit for the month of February, yes, I said trade deficit, was $31.5 billion, the largest since the year 2000 and possibly the biggest ever in China's history. What this says about the Chinese economy is the government and the monetary authorities should, later this year, starting now perhaps, lighten up on things. They've been trying to take away the massive stimulus from 2008 and 2009, which kind of stoked inflation fears. But now inflation isn't the fear, it's the actual economy. 7.5% growth sounds pretty great, but when you're looking at 10% over the past decade, it's not very good. So perhaps Chinese authorities will be on the case and in there. Let's see what happened to the FXI. Down a little bit today on Monday, 0.24%. FXI, the largest Chinese companies that trade, and $38. It was $30. Nice little gain there, about 30% since October 3rd. How about Chinese small caps? Is there big trouble in little China? Not at all, Kurt Russell. No. In fact, since October 3rd, the market bottom last fall, the IWM, which is the Russell 2000, which is the small caps here in the U.S., up about 34%. The HAO, it's an exchange-traded fund that tracks small Chinese stocks, up 41%. So China still has a good deal of momentum going here. Some big deals in the news on Monday. Company called Tudou was merged with another company, Youku. Youku and Tudou getting together. These are video sites in China. Look at that stock price, $39. It closed at 16. Tudou being bought out for about $1 billion to make a bigger kind of a YouTube of China. And even the acquirer in this case, Youku, although it's officially a merger, Youku shares up 28% as well. So big moves there in Chinese video sites. Dang Dang e-commerce. I love this. It's kind of like a chitty chitty bang bang name, but the ticker symbol is Dang. And Dang Dang has not done well since its IPO, but you've had this little bid underneath Chinese internet stocks in the past couple of months. Here, this one's moved from about $4.50 to almost $7 per share. So Dang Dang looking pretty decent. Renren. Now, these are all silly names for Americans, of course, but Renren, it's not a dog, it's a company. It's actually a social networking site in China. Stock started out the year about $3 per share. We're at about $5.62 right now. Nice little gain right there in Renren. One thing to point out, though, earnings per share are negative, although sales are growing by 48% from last year to this year. At least that's what's expected by the analysts. One stock really getting a nice boost in China, as far as internet names go, is Sina, or Sina. Sina operates a service called Weibo, which is kind of the Twitter of China. And you've seen Sina shares since the beginning of this year go from about, $50 to darn close to $75 per share. 50% gain in the last 2 months. Not bad. Here's some the top 5, if you will, Chinese internet names. Sohu, not such a big player these days, but they were 10 years ago. Down 40% though in the past year. Kohu, another one kind of a has-been, down 20%. Netease, more on Netease in a second. Sina was actually down for the past year, and Baidu, more on Baidu also. Let's take a look at Baidu. Baidu is struggling to get across $140 per share. This stock has been an absolute monster for the past, 5-6 years. It was $11, actually $10.45 at the bottom of the bear market in 2008, late 2008. Giving you a 1,220% return since then. Baidu is still looking pretty svelte on an earnings basis, up 56% for EPS, revenue's growing 59%, and it's valued at 30 times earnings per share, $4.59. That's not a very expensive stock, folks. Baidu looking pretty decent. Netease.com, what do they have going for it? Wow, World of Warcraft. A lot of Chinese play World of Warcraft on Netease. Netease shares, nice slow rise here from October 3rd. $36 to $53, just going at it, going higher, nothing fancy. Netease looking pretty decent. Actually, they're valued 12 times earnings. Earnings are growing 14% a year. That's higher than the PE, suggesting that Netease could be your play for a World of Warcraft cheap Chinese stock.